Let's talk about 5 common scary tax myths that are probably costing you thousands. There's a lot of bad information out on the internet, unfortunately, but here you are getting good information from somebody who's not going to steer you wrong. So let's talk about some tax myths that can be a little bit scary because if you don't follow them or you listen to bad advice, you could probably either be leaving money on the table or getting yourself in big trouble. Number one, you don't need to file if you don't make that much money. That's just incorrect. Not everybody needs to file a tax return, but there are lots of people who, although they don't make a ton of money, should actually file the tax return because if they don't, they're leaving some of these credits that are available to them on the table. Some of these credits would be an earned income credit or the child tax credit. So just because you're lower income and maybe, you think, "Oh, I don't have to file a tax return," doesn't mean you shouldn't investigate whether or not you should. Because some of those credits only happen and are only given to you if you actually file the tax return annually. So don't miss out on that. Number 2, side hustles don't count. Look, I know that a lot of people think that if you work for cash, that it is not income because nobody can track it. It's not the reality. So, regardless of how you earn income, and even if it's in cash, it is considered income to you and you need to report it. Now, don't come at me and be mad because I'm telling you to report your cash. Believe it or not, this can be in your benefit. Okay. So if you think about it, there are tons of also deductions that are available to you to write off against that income. So a lot of times people are afraid of something that they haven't really flushed out. Okay. So if you receive any amount of income for any side hustles or anything like that, you do need to report it. And this is really important now in an age of digital technology because outside of cash, which true, there may not be an actual way to track cash, but the IRS has some tricks for how they figure out if you're getting it. There's a lot of ways that people are getting money, Venmo, Cash App, PayPal, coming into them. And for some reason, they're thinking, "Oh, I didn't get a form at the end of the year, so I don't have to report that." But guess what? The government still knows that that money flowed back and forth. And so it is important to make sure that you report that correctly because, again, otherwise you're probably going to end up with some real nasty grams that come, particularly if you get audited or even through some of those reportings. They may have had reportings. You didn't maybe download the statement and you thought you didn't have to. And then they will figure it out and send you a little love note later in the year. Number 3. Home office deductions are a red flag for audits. This is just not true. So, unfortunately, I think there was a time and place where home office deductions maybe had an abuse, and maybe somebody had an old wives' tale that started that everybody who had a home office got audited. That's just not supported by facts. And if you are an individual who legitimately has a home office and works exclusively out of that place and has a dedicated place in their home and has income that is relative to the home office, and these are going to be for those individuals who are self-employed or owners of businesses, you can and should take a home office deduction because you're using this space for the production of business. And so it is a valid and allowable expense, and you should not skip it just because you are concerned about an audit. You should make sure that you understand that all of the expenses related to running your house, your mortgage interest, your real estate taxes, your general utilities, and all kinds of things go into the calculation for how it is that we calculate that home office deduction. Sometimes we're talking thousands of dollars. And if you're scared about an audit that's not going to happen, but because you have the actual support and the deduction is legitimate, then you should absolutely take it. Number 4, I got a big refund, so I did my taxes right. If you're getting a big refund at the end of the year, while technically your taxes may have been calculated correctly on your annual tax return, a big refund isn't exactly something to brag about. The reason is the government does not pay you interest on that money all year. So, if you over withheld your taxes in a very big way and got this huge refund, you gave the government an interest free loan, sometimes for up to as long as 18 months. Why would you do that? You could have had that money in your pocket earning better dollars for you. So, don't think that a big refund means that you did something right. Sometimes it happens, but a lot of times it means you didn't plan. And I don't know about you, but I'm not interested in giving the government a loan with my money for them to use however they want and not pay me the interest on it. So, calculate your taxes to be more appropriate. Getting to a very close break even point at the end of the year is actually the more ideal method because that means that you paid what you were supposed to pay, but not too much. And so you didn't lose out on all that interest. Number 5, I can deduct all of my travel, all of my meals, and all of my car expenses because I own a business. Look, I know that there are some fancy people that love to tell you that absolutely everything you do can become a tax deduction. And, there could be a lot of circumstances where we can have the conversation about whether or not what you're doing has the ability to be a tax deduction. And I think there are plenty of ways to investigate whether that's the case. But the misnomer that every single time you eat because you are a small business owner, it magically becomes a tax deduction, that's not the case. Meals and travel and car expenses have to still meet the test of ordinary, necessary, and having business purpose. So just because you thought Panera Bread sounded good for breakfast and you thought I'll make a call to a prospect on the way, that doesn't probably qualify as a business meal. So you need to be careful here because, again, abuses in these categories, particularly for small business owners in certain categories, are definitely audited and looked at. And if you can't produce justifiable support that your business expense, that your meals, your car, your auto, all these things have justifiable business usage and um, ordinary expenses, and that they're, if you can't produce if you can't produce support that these expenses are necessary and ordinary for your business and have business purpose, then there's a high chance that the IRS would disallow that. So it's not a big deal. Very few people can 100% write off everything in their life, despite their slick marketing. But there are a lot of things can be. But again, you should be sure that you have proper documentation because let's be honest, not everything we do is that trip to the grocery store. Just because I made a phone call on the way doesn't mean my trip to the grocery store was business purpose. So be careful here that you don't go too far because there's a lot of people who somehow think that because they talk on the phone, everything they do is a business expense. And that's not exactly how the IRS sees it.